following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve. Thank you for taking my call. I just wanted to pass a compliment to you. I've taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hole.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you, and I treasure your presence here today. My outcome is to help you to become a better money master, but mostly, folks, it is to provide you with the tools that will help you to lead an inspired life. Oh, baby, that is what it's all about. It's all about leading an inspired life. Let's go take a look at one of these tools. This is the tools that I call visual chain thinking. Visual chain thinking, folks. Now, you've all heard the expression, probably maybe even used it, whether it's in life or in business, that your chain is only as strong as what? That's right, your chain is only as strong as your weakest link. So when we take a look at visual chain thinking out there, it applies in the markets. You know, in the markets today, we'll go ahead and we'll take a look at some weak links out here. It works in the markets are nothing more than a reflection of life. Well, visual chain thinking is about having a life of balance, a life of productivity versus a life of what seems like endless little tasks. How many of you out there have this little to-do list? And on that to-do list, folks, I guarantee if you have one, maybe it's in your mind, maybe it's written down, maybe it's on your iPhone or something, you know, but just simply endless little tasks, a to-do list, folks out there. And what ambitious people know is this little secret. It's understanding that each step towards your goal, it's not a singular step. What I mean by that, folks, if you think about it for a moment, is each discipline towards your goal, it's not a single discipline. Each project that you're working on, it's not a single project out there. If you're in the business of making sales, each sale, it's not just a singular sale when it comes to business. Ambitious people see every discipline that they adhered to as what? They take a look at that as a link in the chain. Remember, you're only as strong as your weakest link out there. Make sure when you take a look at your chain, you're working on what? Your strong links or your weak links out there? Absolutely, you're working on your weak links. You see, your direction, your activities, your disciplines, they each make up those crucial links in your chain of success. When you see that one affects the other and that you want to have a strong fence out there or a strong chain out there, you begin to realize the importance of making it through what? Making it through any difficult or tough days that you've got, that the universe, and really your tough days are just the universe testing you to see if you really want the things that you want in life. And here's the irony that exists in the world for sports lovers. Think about it like this, folks. On Thursday we open up with the theme song behind the PGA Tour out there, because it is, they start their tournaments typically on Thursdays as they are today. Every professional golfer, how about every basketball player? How about every baseball player, football team, and so on? What do they show up with, folks? They absolutely show up with a game plan. They know where they're going before they get there. So you're off to start your day. Maybe it's your trading session. Maybe it's your work day. And what does your plan look like? What does your chain look like? How strong are your links out there? Do you have a written plan? Have you mapped out your game plan for the day? Well, let me leave you with this thought for the day, folks. To dream a dream, what do? You plan for that dream, and then you watch that dream turn into reality. My dream? Just simply being here with you this morning. You can always give us a call, 877-927-6648. You know, the market's relatively flat here right now. The Dow might open just a little bit. Everybody waiting on the FOMC minutes. I believe they get released around 12:15, 12:30, maybe around 12:30, I believe that is. And then you've got Uncle Ben. He'll be out at about 2:15, I believe it is, this afternoon. So we're going to see a market that really should most likely trade within a narrow banded range. Maybe it's a 10-point range, 5-point range, but a pretty narrow banded range up until we see what's going to happen. We're going to take a look at the weak links in the chain out here that are suggesting that maybe the market is not going to like what Uncle Ben has to say. I still believe the S&P will make its way up to at least the 1462 level. That's a 1.272 butterfly, but it's going to perhaps be a serendipitous route on the way up there. The dollar index, we'll take a look at that. It's at a resistance level. You've got the euro that hit a 0.618 expansion, or a retracement, and a 1.272 expansion. So it's starting to pull back a bit. Gold and silver, though. Gold and silver are the ones that are telling us that at least the gold and silver traders at this stage believe that they're going to be disappointed when it comes to Uncle Ben's news out there. Natural gas, it's on its way up to $3.15. That's a low of the July 31st swing point. Light sweet crude. Light sweet crude has been trading in a sideways box trading range here for quite a few sessions. The high of that, I believe the high of that is 98.29. The low is 93.95. What's that mean? That means whichever direction crude breaks out, it's going to be moving $5. It'll move $5. That'll complete an A to B equals CD on the way up there. 30-year bonds have been moving down for 7 days straight. Sort of an anomaly out there. 7 days straight on the way down here. We'll see what today holds for the 30-year bond. If you're watching us on TigerTV, what you're looking at here on my screen, you're just looking at the ES Mini 30-minute chart. You're looking at it trading right now at 1430.50. Where does that put it? It's really down just a couple of points, so no big deal out there. And the trading range here is at the 1440 level all the way down to the 1422 level. I don't suspect that either of those will necessarily be tested here, at least in the morning hours. I just say us just simply having a straight line here. So it's really a great time for you to actually give us a call here, and we'll just simply take a look at your stock, try to figure out what your equity might be doing. And, folks, I don't often talk about really my newsletter service. There's, enough commercials maybe that are played here during the hours. But, there are certain times when I put together a newsletter. Just to give you an idea, my newsletter averages about 60 to 70 pages per day. And what that is, you might say it's not all reading. There's a number of charts in there. It's all about education. I'm all about education-based everything that I do out here. I want to be able to teach you how to fish, as they say. And so if you've never tested the newsletter, you need to go out there and check it out. But most importantly, the reason why I'm talking about it is because there are things that are in the newsletter that I just simply don't reveal because my clients are paying me to help them to protect and guide and provide them with different ways of thinking or something, a correlation. And that's what's really included in today's newsletter. There's a correlation that you won't find anywhere out there, and it's a correlation that's really important in being able to, I talk about making sure that you have a plan out there. We've got a plan. It's all mapped out there. You can try that for 30 days. But today is really an important one. Not that each of them aren't, but today there's some important information that is revealed inside that newsletter, and I know that it will be helpful in you and guiding you in your trading. So give that a shot. Go over to the homepage at TFNN.com. Again, we take a look at the ES Mini here, not really doing much on the 30-minute chart, so let's go take a look at the daily charts and see what type of pieces of information we can pull out of here. Let's first take a look at what has been the strength in the chain out here in the markets. That's been the NASDAQ futures, and the NASDAQ futures here, they punched through their resistance area. They did that last Thursday, September 6th, when they moved from a low of 27.66 all the way up to a high of 28.29. I'll get my numbers right here. and moved up, with wide price spread. Unfortunately, what it did was it set up a new resistance area by creating a three-river evening star candle formation. Now you've got resistance here in the NASDAQ futures up at the 2836.25 level. What the NASDAQ futures have done is, they stayed inside. They came back inside the trading range really after 2 days. It only took 2 days for them to get back inside the low of March, or the high of March 28th out there. That high, 27.90.25. You can see right now it's trading at 27.87.50. That's the strength in the market. I expect we'll see the NASDAQ futures pull back before they move higher out there. Let's go take a look at the Dow futures. Why? Because the Dow had been the weak link out there. So let's go see what we took a look at strength. Now let's go see what weakness is doing. Let me get rid of a couple lines out here just so it's easier for you to see. Now, if you're listening to us on the radio, we absolutely appreciate you doing that. You can always catch an archive of this show on Channel 9 out there. And as we take a look at the Dow futures, if we go back to May Day, the May 1st high out there was 13,284. We got a close above it on the 7th, so that was last Friday. Closed at 13,296, just slightly closed above it. That still is breaking a resistance. The real area here, then you close above, and then you give it up on Monday. On Tuesday, the Dow closed at 13,293, just slightly above it. Yesterday, the close on the futures contract, 13,284. And what was the number it was going against? 13,284. You're trading below it right now. So no conviction when you take a look at the top line number here, trying to lift the tide higher. But we know the area that we're watching for a real breakout here in the Dow. If we go take a look at the Russell 2000, the Russell 2000 actually has been very strong out here. Russell 2000 traded up towards its session high this morning, which is 842.30. Closed out yesterday, however, at 842. So it's not exactly moving a bunch out here. And what the Russell 2000 wants to do, it wants to at least attack 850.60. That is the March 27th high. It's trading inside that swing point. It has not tested that area right now, and that is on the Russell 2000. Let's go finish this little puppy off. And let's take a look at the S&P 500, the ES Mini, and let's see what that is doing. We've got the ES Mini right now trading out at 1430, and what that is really trying to do here, if we come all the way back, I guess I have to shrink this. Give me a second here. Okay, so now you're taking, it's obviously gotten very small here on my screen, but you can see this black line that's going across. That's really the next swing point that the ES Mini wants to contend with. That swing point, let me try to blow it up, make sure I give you the exact number out here. I don't want to give you any bad information. That would be May 19th, 1441, even Steven on the ES Mini. May 19th, that is the area. If we take a look at the low of that candle, it's 14, we'll write this down here, 1421.75, and right now you've got the ES Mini trading at 1430.50. So it's inside that swing point. It's up and over the March 27th level. That is where the ES Mini wants to at least test, and you get a break above the 1441. It says absolutely what you want to see is higher prices out there. Right now, we've got the DAX trading off. The DAX is down 26 points. The FTSE's up 12. Over in Asia last night, a mixed bag. You had the Nikkei up 35 points. The Shanghai was down 17. The Hang Seng off 27. Gold right now trading up $2 at 1736. It's silver we're going to take a look at when we get back. But first, when we get back, we'll go to John in Sarasota and take a look at the UUP. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Let's go to our man John in Sarasota. John, thanks for calling. Thanks for holding. How are you this morning?
Very good. Thank you, Steve. How about yourself?
Excellent. Thank you for asking. You wanted to take a look at the UUP. Tell me what you're looking at, how I can help you. And
well, is today the day?
Well, today's absolutely the day. It's always the day. Of course, it's the day where we should see some volatility. And are you looking at taking a long trade? I'm assuming that's what you're doing.
Yes.
Yeah. I see that trade out there. I see a couple of currency trades out there today. In fact, those are, giving some good signals. If we take a look at the U.S. dollar index, the daily chart, you've got two patterns that have completed or that have come together in the same general price. Or really three patterns that you've got that have come together in the same general price area. You've got a 1.618 butterfly. That really completed at the low that was put in yesterday out at the 79.50 level. You've got a 0.786 Gartley buy pattern. So that was a butterfly buy. You now have a 0.786 Gartley buy pattern as well. That completed coming off of the lows, folks, going back to May Day, May 1st, all the way up to the high that was put in on July 24th. So if we take, and then you've got the third pattern, you've got the descending price channel that it has been traveling in. It's really, on that edge right now where you ought to see a bounce. So everything is here where you're going to see either the trade's either going to work or it's going to fail. I mean, it's where your back is totally up against the wall. You are not in the middle of a stairway here when you would take a look at that trade. If we go over and take a look at the, and this is, you've got to be paying attention to the U.S. dollar index when you are placing that trade. If we take a look at the UUP, it closed yesterday at 21.89. And so if we take a look at the UUP, the average daily true range on this thing is about 10 cents. So it closed at 21.89. It will probably open somewhere in that level. If we go over to the position size calculator, I'll help you with this trade here. And folks, if you haven't tried the position size calculator, go to the homepage at tfnn.com and the little carousel on the left. Maybe I'll pull that up after John and I are finished here. You can access that for 30 days. More important is go watch the video because you can do some of this stuff manually. This just here makes it a little bit easier to actually do. So in this case here, John, if you were going to enter the trade, you don't need to risk more than 0.25, a quarter of a percent of your working capital. And the reason is, we take a look at using the stop, and today you certainly would need to use at least a wide stop, 1.618 in a volatile market. I would almost suggest if you get in this trade here that if you're going to take this trade before Uncle Ben comes out and speaks, you might actually have to make your stop more of an end of the day, because I could see the volatility spiking up and down while people are trying to understand exactly what Uncle Ben actually means. Because the statement's going to be released for a couple hours, the market's going to digest it, then he's going to come on at about 2:15 or so. He's going to throw out words that maybe people don't completely, they're going to take those words to mean whatever it is that they want. So in this case here, if you actually got into the UUP trade, let's say you entered it at 21.74. Why did I say 21.74? 21.89, I believe, was the 21.89. I believe was the price that it was traveling at here. You would have and I think as far as your exit, you're projecting about 22.65 on that, on the UUP. So what this would set up here, you need about 30% of your working capital. This says you'd purchase 150 shares, and your hard stop would be if you get a close below the level of 21.73. 21.74 was the swing point that was out there, I believe, going back to February 29th. We'll take a look at that. So how I would trade this, because you're risking a quarter of a percent here, I would actually intraday not have my stop in. And I don't usually tell people that,
Okay.
But it's just that if you're going to try to get in on this trade here before then, that's what I would do. The pattern is set up such that it also would be good to just simply wait to see how the market responds, and if the market is moving in the right direction, and even though you've paid a little bit higher cost, to go and take the trade then. But today should be pretty volatile, and so you've just got to be careful today with regard to stops. You've just got to be kind of careful, especially on the currency side. Does that help you?
Yes, but I was going to get a couple options on it.
Okay. So, just use, what I would do is if you do that, then if you get a close below February 29th, so here's a way that you play it, and that's 21.74. If that area gets taken out on the UUP, then what I would do is just simply close out the trade.
Okay.
Okay? That's how I would play that.
Very good. Appreciate that.
You bet.
Thanks very much, Steve.
My pleasure. Thanks for calling. Let's see, folks. The Dow futures off about 30 right now. It's probably going to break about even when you take a look at fair value. 877-927-6648. Hope you're off to a great start of your Thursday, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow up 5. S&P hasn't woken up yet, totally flat. Composite up 2. Russell 2000 didn't get into the gate, off a $1.30 here right now. Microsoft down 20 ticks. Intel off 26. Google up 20 cents. Cisco down 4 pennies. Apple trading down at 676 and change, up $7 right now. If we take a look at what's popping and what is dropping in the marketplace, you got Equinix, EQIX is the ticker symbol, having a nice morning, up 12%. That's up $22 and change. Their board approving the pursuit of a REIT conversion out there. You've got Apple next in line, up $7 and change now. You got PAL Corp, PLL, up 7%. That's up $4 and change. Baidu up a couple of percentage points. That's up $2 this morning. K12 Inc., LRN is the ticker symbol. They're up 8%. That's up $1.73. Salesforce Innovation, CRM, they are up $1.47. in the above a dollar space. That leaves BE Aerospace, BEAV Aerospace. BEAV is the ticker symbol, up $1.48. To the downside, you've got Sears Holdings Corp off 5% this morning. They're down $3 and change. SHLD is their ticker symbol. CompuCredit Holdings getting shellacked this morning. A $5 stock, no longer a $5 stock. It's trading at $4.40, down $1.74. That's off 28%. Nike trading down $1.63 right now. You've got First Merit Corp, FMER, off 7% this morning. That's off $1 and change. Bon-Ton Stores, B-O-N-T. Bon-Ton Stores has had one heck of a run out there in the last 10 days. It's up about 50%. Pulling back this morning off 18%. You've got Northrop Grumman, NOC, the ticker symbol, down $1. And that's it, leading the charge on the way down, both off by $1 or more and up by $1 or more. If we take a look at currencies, we were talking with John in Sarasota about the currency market. He was taking a look at the UUP, which is the U.S. dollar index. If we take a look over in Japan and see what's going on here, Japan was showing a trend line coming off of the high that was back in March 15, 2012, up at 84.17. Next touch point was really the high back in June 25th, 2012. That trend line here has been now really broken this morning here with conviction. It's trading into the swing point low. It's actually below that. Let's see here. The swing point low, which should have acted as a support area, was at 77.65. You're at 77.48. That is the June 1st low out there. Why do I say a support level? Because you had a nice bullish engulfing candle that occurred here on June the 4th when the market came back from the weekend. You had a nice follow through on the next session here. And this level, it's being tested this morning. That doesn't mean that, and it does mean this, that if the U.S. dollar yen currency pair closes back above 77.96, it says that bullish engulfing candle, those bulls are still around. If not, what is more likely to occur, and I would expect now that this would occur during after the FOMC, either the release of the minutes or Uncle Ben coming on board, would be to see the U.S. dollar Japanese yen actually move down to a 1.272 butterfly pattern. That would be in the price point of 76.89. What you've got there, you've got really great, it's kind of a textbook thing here. If I was going to talk about sacred geometry, and we're going to take a look at Fibonacci expansion and contraction numbers. Here's a pattern where you're seeing you've got a 0.618 retracement off of highs. That's the high that was out here back in June 25th to the next high that was put in on August the 20th. So you had a 618 retracement. You're going to take a look at that price point of 76.89. Got to give it a few pennies here, folks. But that price point would be a 1.272 expansion between the June 1st level and the highs that are put out here in June 25th. You'd also have a 1.618 expansion off of which would be the C to D leg out, the B to D leg out here. Let me restate that. That would be a 1.618 expansion of the BC leg out here. That's what I'm talking about. What are you talking about, Willis? What I'm talking about here is the low at 77.90 on August 1st to the high that was put in on August 20th at 79.65. So that looks like where the U.S. dollar Japanese yen wants to travel to. As long as we're in the currency world, let's go take a look at the Queen and see what the Queen B is doing out here. After making a 1 to 1.272, A to B equals CD up. It is now resting, trading at the lows of its sessions. Not really a big deal, pulling back to the 1.28877. The euro wants to head up to 131.71. That doesn't mean that it doesn't pull back here first, but it wants higher price out there. That is on the euro. Higher price on the euro. What does that mean for our markets? Yeah, it means our markets also are going to want higher price. Let's go take a look at high-ho silver and gold out here. You've got silver trading out right now at 33.10. And if you take a look at yesterday, now what silver has done, if you just simply come back to the swing point area, there's several swing points certainly that you can take a look at retracement levels. We ought to do that. We'll do that here, in fact, right here, right now. So the first level that we're going to take a look at is the high from February 29th. You had silver at $37.58. So from that high all the way down to the low that was established in silver down at June 28th, when it got down to 26.10, what silver's done is a 0.618 retracement. That's at 33.19. Let's go ahead and erase that line. So you got 33.19 here as the 618 off of one set of swing points. Let's go take a look at the next set of swing points. That would be what I would use here is the high on August 23rd, silver at 44.27, all the way down to the same low that we used. So we're going to go right back down there. What you're going to see is the 0.382 retracement, which is the red line going across the screen, 33.14. You've got silver trading out right now at 33.12. So you can see that, you got silver against a 0.382 retracement of one set of swing points against a 0.618. And then if we take that back all the way up to the high in silver, that's going to be obviously less than a 0.382 retracement. So if we go back to the high on April 25th, when it was at 49.82 or spiked up to that level, all the way down to the low, what you'll see is the 0.382 level, $35.26. So $35.26. If this area here gets broken, silver ought to travel up to that level, $35.26. I do suspect, and what the traders here in silver are telling us right here, right now, is that silver wants to pull back. So that's what they're signaling. If you'd like to understand why, go check out the my newsletter. Try that for 30 days, unconditional money back guarantee. Everything is laid out in there. Right now, it looks like silver will pull back to 31.13, perhaps more likely sweet 618, which will be $29.27. Of course, it's going to be all up to Uncle Ben. But if the silver traders know what's going on ahead of time, they're signaling that they don't like what's going to come out of Uncle Ben's wild rice recipe. If we take a look at gold, the gold traders, so currencies rule the world. Well, I'd have to say that gold and silver certainly are a currency out here. Gold is also signaling the same thing, that it too wants to pull back after having one heck of a nice move. I suspect that where gold would pull back to, let's just simply take a look at some retracement levels. Let's also take a look at the descending tops line that it broke up. But if we look at just simply the rise off of the low from August 15th, because it really hasn't looked back that much, the low out there was 1592, and what we'll do is if we take a look at sweet 618, that brings gold back to $16.52. It does it on the right volume level. That actually turns out to be a pretty nice trade. That is on gold. That too, the traders out there are suggesting that they do not like what is going to be announced today. We'll see if they're right or not. I can just tell you that that's what the gold traders are telling us. If we go take a look around the world, what we've got going on here in the DAX here made 1 to 1.272 A to B equals CD patterns. If we take a look at those, you can take a look at the first one was the A to B equals CD down. That was starting with the swing point from March 16th, moving down to the swing point of April 23rd, that low, 64.99, and the retracement up to May 2nd as it got up to 68.75. A 1 to 1.272. That's the black line that's going across there. That's the A to B equals CD it made on the way down. On the way up, what does it do? Yesterday, it makes a 1 to 1.272. A to B equals CD. The market always working in harmony out there, folks. It's just you want to understand these patterns. You certainly want to understand how to buy and sell the D point out there. And then if we take a look at the D point here on the DAX, well, that completed yesterday. Today, you're actually getting a bearish engulfing candle out here. Session is not over. The DAX is at 72.94. If we take a look at where the DAX ought to pull back to the September 6th low. 69.77.86. It's at 72.93. If that's in fact what happens, you think that'll scare folks that are long inside the DAX? Think it'll shake out a few bears? Yeah, I think it will. But that's the target that you ought to be looking at if you were interested in going long the DAX out here. Let's go take a look at some of these stocks that are popping and dropping. You've got Equinix up a nice $20 and change. So let's go take a look at that equity, see where that is trading to, and take a look at the volume behind it. EQIX is the ticker symbol. Have been, I don't know if they still are, an IBD stock out here. I imagine that they are. Getting up over swing point with volume. Let's go take a look at this here. It's at 207.43. This has been one heck of a nice little rocket ship. Let's put this here on the... And actually, folks, this equity here was not giving you, any real indication that what we saw take place today in the equity was going to occur. What it was at least doing was it was pulling back to its last gap up, which was on July 26 on the daily chart, moved up with 3.3 million shares. The high there was 183.67. As this pulled back yesterday, it never got down to that level. And today gapping up. But selling off a bit, sell the news here. Perhaps that's what we're seeing here with Equix. Let's go take a look at a longer-term chart on this. Let's look at the weekly. The weekly here had A to B, a 1 to 1.618. A to B equals CD. You're up over that area right now. It looks like what this wants to do is a 1 to 2 A to B equals CD. If you had Tom's book, The Art of Timing the Trade, that book will tell you that when you do a 1 to 2 A to B equals CD, which would be $225 in this case here, you would go ahead and what? You would go ahead and expect to see some type of change in trend take place. So that's at the 225 mark, folks. And, speaking of Tom's book, here at TFNN, we've just got a few more days left in our Tiger Dollar promotion. And you want to make investments in yourself. I promise you, and this is a great place to make an investment in yourself here, folks, with all the education that's offered by all of the great hosts that are out here. And so go to the homepage of TFNN.com. What you'll see there is you'll see the opportunity for you to either get an additional 20, 25, or 30% on your money. The best deal is simply put down $1,150. You get $1,500. That's a 30% bonus. You can do $800, which converts to $1,000, or $500 converts to $600. And folks, these are transferable. And what it really means is if you've got some children out there, make an investment. Continue to invest in your children out there, because don't you wish that maybe the position you were in, maybe you did have a father that took, or a mother, or a grandfather, some figure in your life that took you at some kind of young age, 18, 19, 20, 16, 25, 30, all those ages seem young, and pulled you off to the side and said, son or daughter, let me teach you. You need to learn the tools, not just about budgeting your money, but how to make your money work harder for you. And so Christmas time is not too far away here, and the holiday time. So, folks, I would suggest that you really consider, as if you've ever scratched your head, what do I get? If you want the gift that keeps on giving, go to the homepage of TFNN.com, sign up for the Tiger Dollar promotion right now. As long as you're over there, also download Tom's report, The Bull Market in Florida Housing. Tom is going to be up in the Boston area today, this evening for a workshop. Go check out that work paper, the special report. It's got great information that you need in there. Even if you're not interested in the housing boom, there's information in there that you just simply need to know that'll help you to shape your thought process. And you need to always open yourself up to new information that's out there. And Tom certainly covered that in the Bull Market in Florida Housing Report. So that was on Equix, and having a nice move, still up $20 and change. Let's go take a look at some of these other stocks out here popping and dropping. Well, we might as well take a look at Apple, the iPhone release out there. Let's go see what Apple is trying to do, or Apple is doing out here. We've got the 10-minute chart. You see it gaps up here this morning. Well, let's actually put the daily chart out here on Apple, because you can see volume-wise really nothing that fantastic for a Apple announcement. So let's go take a look at the daily chart on Apple and what Apple did do. So if you're in this equity here, here's one thing that I will tell you. If you take a look at this Apple chart, so Apple makes a 1.272 butterfly pattern. Does that, reverses pretty solidly on September the 10th out there. So the resistance area now on Apple is at 683.29. But what did it do yesterday, folks? As Apple had moved down, and it moved down far enough to create what? To create one of Stevie's hammer candles. That says, if you're long Apple and you get a close below 656, if you're long, you're wrong. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Let's all go water skiing because the markets are totally flat out there. Not a ripple in sight. The Dow down 73 cents. The S&P down $1.11. Composite down 67 cents. The Russell, the weak link in the chain right now, down $2. And we were talking about Apple before we went to a breakout here. So let me give you the parameters on Apple. They're actually pretty easy to identify. If Apple closes above the swing point high from September 10th. That means it's got to close above 683.29. Apple will travel up to $722 in that vicinity. That would be the 1.272 expansion. Let me make sure. Hold on. I'm using the wrong numbers here. Let's do this. Let's do this the right way. Sorry about that, folks. Good thing I noticed that. I want to give you the right numbers here. Okay, what Apple will then move to is 714. 714. Okay, so 714 to 722, but really 714. That would be the 1.618 expansion of the swing points out here. The swing points that I'm looking at are April 10th, the high out there at 644 even, and the low that came in on May 18th out at 528. So if Apple closes above the swing point from swing point high here of September 10th, that would be a close above 683. That's where it will travel to. Likewise, if it doesn't bust that up and you get a close below yesterday's hammer candle, and you got to love how the markets are always communicating to us because they give you the information so that you can manage your trade, either right or wrong. In this case here, Apple putting in a hammer candle yesterday. So that low of 656 is very important. You get a close below that. As I was saying, if you're long, you're wrong. And what I mean by that is you'll see lower price. How much lower price? Well, ideally, or not ideally, but more likely what you would see is you would see Apple travel all the way back down to the July 25th low. That is in the 570 to 580 range, trading at 670. So it's about a $100 swing out there, but yet all you have to do is just simply watch the price point is 656. Now, it can trade intraday down below that, but as long as that area holds, then that would be the place that you're looking for. If you're looking to go long Apple, if you take a look at the iPhone release and you believe that going long Apple is good, what you actually want to see is you want to see Apple get down as close to 656 as possible. That's where you could go ahead and fire away because that hammer candle, those bulls ought to be supporting that price point. And then if you get it closed below that, you'd close out the trade because in that case, if you were long, you were wrong. So kind of a nice opportunity there. That way, if you also take a look at wanting to be able to trade the NDX, the Qs, because Apple is such a heavy weighting in there, you've got really some very, very nice parameters here for that trade. That was on Apple. Let's go take a look at one of these stocks here that are dropping. Let's take the leader in the clubhouse. That is Genesee and Wyoming. GWR is the ticker symbol. They're off about 6% here this morning. Let's pull up that stock chart here. GWR again. That is gapping down, doing it with some volume. This thing here does have some support, but that support where it actually last broke out is in the $54.76 range. It's at $64 even right now. Volume out of this thing here, and this has created an island reversal. Oh, I'll be darned. Let's take a look at this here. We're going to go back and take a look at September 11th. The high there, 66.68. I don't remember that. So 66.68. Yesterday, the low, 66.70. Those 2 pennies are really important, folks. So 66.70. So at highs, let's take this thing back here. It almost created an island reversal here. This candle, it didn't when it last traded off February 3rd. Folks, when it almost created an island reversal, this thing went from the highs of $66 all the way down to 47. This thing here, and that is, so yesterday was all-time highs on this. Not a good sign if you are long Genesee and Wyoming. This actually may be a short candidate here. It's going to have some support levels here, but that island reversal, very foreboding, folks. Folks, thanks for being here. If you're off to start your day, have a great Thursday. I look forward to seeing you in the morning. If not, stay tuned for the Money Master Show. I'll be up in just about 7, 8, 9 minutes. Take care. Bye-bye.
Time is the great equalizer of